Your Long Beach home can have equity and still feel the market. That is the warning sign inside Maze data. Some sellers are getting validated fast. Others are learning in public that the number they believed in was hopeful value, not marketable value. And once that happens, the conversation changes. Buyers see days on market. They see the reduction. They start asking what else is negotiable. Price, repairs, credits, terms, or timing. So the question is not, does my home have value? Of course it does. The question is, can my price survive the marketable value test before buyers start testing it for me? I'm Hernandez, and I help Long Beach homeowners understand what the market is really saying before they start making their next move. And this June update is about exactly that, where buyers are still moving with confidence and where sellers are having to prove their number. We're going to look at where single family homes are still getting fast validation, where low inventory is hiding thinner buyer depth, and why condos and townhomes are facing more comparison pressure. So as you watch, keep this filter in mind. Buyer pressure, choice pressure, the first 2 weekends of feedback, and payment pressure. Those 4 signals decide whether your price is marketable value or hopeful value. If you're watching this because a sale may be coming up this year, call or text me using the contact information in the description. We'll run the marketable value test before your price is public so that you know whether the market is likely to lean in or push back. If you're not ready to talk yet, use HomeBot, link in the pinned comments or description. Keep your equity and buying power in front of you while you decide whether moving makes sense. And if you want to keep watching the Long Beach market, subscribe to this channel. Now with that in mind, Maze data starts to make a lot more sense. Across the Long Beach single family lanes in this update, May gave us a reason to be careful. Active listings rose from 272 in April to 300 in May. Closed sales moved down from 109 to 100. Pending sales dropped from 109 to 79. That does not mean the house market is broken. It means more homes were visible, fewer buyers were newly committing, and sellers need to understand whether their specific lane still has enough buyer pressure to validate the price. Condos and townhomes had a different kind of signal. Active listings were basically flat, moving from 314 in April to 316 in May. Closed sales improved slightly from 54 to 56, but pending sales slipped from 55 to 52, and compared with last May, pending sales were down meaningfully. So attached housing is not frozen. Units are still closing, but buyers are comparing harder before they commit. That is why the marketable value test matters. Closed sales tell you what buyers already accepted. Pending sales tell you where current buyers are committing right now. Active inventory tells you how many alternatives buyers can see before deciding whether your property deserves their payment. The first place that tension shows up is in the faster house lanes, where the market is giving sellers opportunity and a warning at the same time. The clearest single family support showed up in several house lanes where supply, condition, pricing, and buyer power depth were still lining up. East Long Beach had 55 active listings, 24 closed sales, 20 pending sales, 2.4 months of supply, and a median of 8 days active. Los Altos and the Park Estate side had 45 active listings, 19 closed sales, 12 pendings, 2.1 months of supply, and also had an 8-day median. North Long Beach had 42 active listings, 14 closed sales, 17 pendings, 2.3 months of supply, and a 10-day median. That is a functioning house market. It is not casual and it is not automatic, but it is still giving well-positioned sellers a relatively fast read. For an owner, that kind of speed can reduce the showing burden. It can shorten the amount of time your home has to stay perfect. It can help you move from uncertainty into a real plan. It also protects negotiation posture because buyers do not have weeks of visible listing time to use against you. But speed cuts both ways. If homes in your lane are moving in 8 or to 10 median days, and your home is sitting quietly after that first stretch, the market is giving you information. It may be condition, it may be presentation, it may be layout, it may be the way your home compares to the next one, but very often it is price. That is where sellers can get hurt. They see a strong lane and assume the lane will carry out any number. The data does not support that. A fast lane helps where the home enters the market with a price buyers can defend. It does not rescue hopeful value forever. Bixby Knolls in California Heights also showed a constructive housing signal, though with a smaller closed sale count. That lane had 37 active listings, 10 pending, 6 closed sales, 2.8 months of supply, and a median of 10 days active. The median sales price was $1,617,500, and sellers received 104.8% of original price at the median. That is a strong price behavior, but I would still treat it with care because 6 closed sales is not enough to make a lazy rule for every home. It does tell us buyers rewarded the right properties in that lane. It does not tell us that every seller can skip the discipline part of the plan. West Long Beach was also also quick, with 18 active listings, 4 pending, 6 closed sales, 2.8 months of supply, and a median of 8 days active. The median sales price was $624,950. That kind of speed matters because it tells a seller that the buyer pool was still acting when the home lined up with the market. But speed is not the whole story. A fast sale only matters when there is enough real buyer depth behind it, and that is where some homeowners can misread the market. Low supply can help a seller, but low supply is not the same thing as a deep buyer pool. That distinction matters most in lanes where the numbers show value is still there, but the pool of buyers who can validate that value looks more selective. The coastal single-family lane around Belmont Shore and Naples is a good example of that. In May, that lane had 62 active listings, 12 closed sales, only 7 pending sales, and 4.8 months of supply. The median sales price was $2,144,475. Sellers received 97.5% of original price at the median, and homes showed a median of 15 days active. That is not a dead market. Buyers were still absorbing high value, homes were still closing, but it is a more deliberate selling environment. At that price level, a buyer is not reacting to the house. They are reacting to the payments, the insurance, the trade-offs, the location premium, the condition, the next coastal option, and whether the home feels worth stretching for. For a seller, that means the sale may still happen, but the path can require more precision. The home has to justify its number under a sharper comparison. When the original price received number sits below 100%, that is not a panic signal, but it is a discipline signal. It means the first number matters. Central Long Beach gives us a different kind of caution. The single family lane had 12 active listings, 4 closed sales, 0 pending sales, 4.3 months of supply, and a median of 53 days active. The median sales price was $622,500. That is a thin sample, so I would not use it to make a sweeping statement about every home there. But from a homeowner's point of view, 0 pending activity is not something to brush past. It means the launch plan has to be grounded in the actual buyer pool, not in the hope that limited competition will automatically create urgency. The same broader lesson applies to smaller or mixed lanes like downtown single-family homes, Eastside and Sophia houses, Bluff Heights and Rose Park, and other pockets where the counts can be useful but not definitive. Some had encouraging signals, some had small samples, some had price strength, some had more patience built into the selling experience. And that's the point. The house market is not one story. Some homes are likely to receive fast validation, some may still sell well, but only after a more precise pricing and preparation plan, and some need real humility because the available data is too thin to support overconfidence. The condo and townhome side is where that same test gets less forgiving. A condo or townhome buyer is not only buying the unit, they are buying the monthly package. Price, HOA dues, parking, building condition, reserves, insurance, layout, stairs, elevator storage, outdoor space, view, walkability, and the unit 2 buildings over that may feel easier to say yes to. That is why attached housing can feel more exposed to comparison. Downtown and Alamitos Beach had the largest condo and townhome supply in this update. 148 active listings, 29 closed sales, 25 pending sales, 6.1 months of supply, and a median of 34 days active. The median sales price was $475,000, and sellers received 98.4% of their original price at the median, but 100% of last list price. That gap tells us a useful story. Buyers were not refusing to buy, units were closing, but the original number needed to survive a lot of comparison before buyers accepted the final number. That is the difference between hopeful value and marketable value. Hopeful value is the number that sounds right before the market sees the property. Marketable value is the number buyers are willing to validate after they compare payments, condition, monthly costs, and alternatives. When that adjustment happens publicly, leverage can change. Buyers see time, they see reductions, they wonder where else the seller may be flexible. The conversation can move from price into repairs, credits, terms, and concessions. That is why pricing discipline is not pessimism, it is protection. The coastal condo and townhome lane around Belmont Shore and Naples also showed comparison pressure, but in a higher price band. It had 41 active listings, 11 closed sales, 8 pendings, 4.6 months of supply, and a median of 32 active listings. The median sales price was $949,000. That lane can absolutely still absorb value, but a buyer near that price point is comparing the lifestyle premium against the monthly payment very carefully. The ocean proximity, the neighborhood feel, the walkability, and the building all matter, but they still have to add up inside the buyer's real payment comfort. Eastside and Sophia condos and townhomes had had 29 active listings, 4 closed sales, 4 pendings, and 5.5 months of supply. Love Heights and Rose Park had 24 active listings, 3 closed sales, 4 pendings, and 5.4 months of supply. Los Altos and Park Estates condos and townhomes had 26 active listings, 5 closed sales, only 1 pending sale, and 5.2 months of supply. Those are not the same market, and I would not flatten them into one verdict, but they share one practical seller lesson. When buyers have alternatives, the unit has to make sense faster. The price has to feel defensible, the monthly cost has to feel explainable, the condition has to compete. And for owners in smaller attached housing samples, the right move is not to borrow a broad condo story. The right move is to analyze the exact unit and the exact buyer alternatives. A small sample can point you in the right direction, but it should not become a blanket pricing plan. That is where this Long Beach update becomes useful. The market is not saying all houses are easy and all condos are hard. That would be too simple and it would be wrong. The market is saying each lane is creating a different selling experience. For some house sellers, the current market can still shorten uncertainty and protect leverage. For some higher price or thinner depth house lanes, the market may still support a strong sale, but it depends more on precision. For many condos and townhome owners, the sale is less about whether buyers exist and more about whether the unit can survive comparison. If this is starting to sound like your situation, call or text me from the description. We'll look at what buyers would experience if your home hit the market soon before the feedback is happening in public. If you're still waiting on timing, use HomeBot. The link will be in the description. And if you want the monthly Long Beach read, subscribe to this channel. Now let's talk about the payment environment. The 30-year fixed mortgage rate was 6.53% at the end of May, up from 6.3% at the end of April. That move may sound small, but in Long Beach price ranges, it changes the monthly payment conversation quickly. Buyers may still be serious, they may still be employed, they may still want the home, but when the payment is tight, they do not need to dislike the property to pass on it. Sometimes they simply need a clear option for that money. The job market is not giving us a collapse story either. The latest national employment report showed 115,000 jobs added and unemployment at 4.3%. That supports a buyer pool that is still functioning, but functioning is not the same as unlimited. It means qualified buyers are still there and they are more selective. Affordability has improved from last year in the national index, but it is still tight. And in California, buyers are also thinking about things like insurance, HOA dues, and taxes. That is why the best read is not that buyers disappeared. The better read is that buyers are choosing where to spend their payment more carefully. So this is where I would land the plane. Long Beach is still producing sales. That is not the question. But May showed that seller leverage is no longer something you can assume from equity alone. The leverage sits in the match between your price and your lane. If that match is strong, the market can help you. It can shorten the showing burden. It can protect your negotiation posture. It can make your next move feel more manageable. If that match is weak, the market may still get you to a sale, but it may do it through time, feedback, adjustment, and negotiation pressure. So after all of that, the marketable value test comes down to a practical seller filter. Before you go public, your home has to survive 4 things: the buyer pool in your lane, the competition buyers can choose instead, the first 2 weekends of feedback, and the monthly payment reality buyers are carrying into the showing. When those pieces line up, the market can help you convert equity very cleanly. When one of them is weak, the price, prep, timing, or launch strategy has to do more work. That is the difference between hopeful value and marketable value. The data matters because it tells us what buyers have been absorbing in the lane, but the data does not price your individual home by itself. Your condition, layout, upgrades, location inside the lane, competition, timing, and buyer pool still decide whether your equity can become marketable value. If selling in Long Beach is becoming a real decision, call or text me using the contact information in the description. We'll run the marketable value test before the market is reacting to your price. And don't forget to subscribe for the next Long Beach update. Know your lane before the market tests for you.